So hello active traders and welcome to our Breakout Mastery preview event. I only do these once or twice a year. This is the summer event. I usually do it in January as well. It's a insight into the Breakout Mastery coaching program, monthly webinars that we meet the last Wednesday of each month, and we've been doing that since the year 2011 continuously with hundreds of folks being trained. I'd like to cover very advanced, mainly swing trading and a little bit of intraday trading, stock breakout patterns, and advanced charts to look at. As always, all information is for educational use only. We're not making advice or recommendations about what to buy, sell, or hold. And by watching this, you do not make actual trades. We make no profitability or performance claims. It's all for educational use only. If you've got questions, hit me up. Let me know what's on your mind. One thing that differentiates, and I'll continue to mention this, is I do show tax return proof that I'm a real trader who's done as much as 4.9 million worth of real trades reported to the IRS in a single year. So for that reason alone, I should be charging quite a bit more for my training than all my competitors, none of whom seem to be able to produce tax return proof that they're the real deal. I'm the real deal. Screen cap proof. Here's a couple MGM trades I made years ago, back when MGM was only 10 a share. I made $2,900 on these two trades alone in a single morning. I sold them right on the opening bell at 9:30, right, 9:31, because they gapped up a little bit and starting to pull back. I took the money and run. I sold right on the open. The realized P&L that day at $3,700, which is just under 10% realized P&L on a $38,000 trading account. So I do prove I'm a real trader. What a novel idea. You may have seen me at my money show appearances. Always great to see people cheering out loud when they learn with me. Stocks and commodities, I'm in every single month's issue. The now sadly defunct Active Trader magazine, I used to publish in that all the time as well. And I used to do live Las Vegas seminars. So anyway, Breakout Mastery is designed for both intraday and swing traders for stocks and ETFs. And we cover both foundation or core as well as advanced tactics. And the main thing is to help you focus on improving your breakout entries and exits. And the main thing that I focus on is, number one, breakout trading strategies and patterns that work, and then how to avoid false breakouts, because that's really one of the more important skills when you think about it. Of all the times that you've gotten into a trade and it does a false breakout, I've spent my life's work, over 20 years now, trying to figure out how to avoid the freaking false breakouts and get in on things that actually run. We're going to look at some charts tonight. Breakout Mastery is kind of an immersion system course. You get answers about how to trade breakouts with better entries, timing, and breakout trading patterns. And the goal is to really get you up to speed on price action breakout trading in a way that makes sense. So I'm not going to read all this. These are the types of things that we cover in Breakout Mastery for our traders. We're going to jump into the charts here. And right now, because I get tired of looking at PowerPoint, so I'm a trader. I can't stand looking at PowerPoints. It drives me up a freaking wall. I'm a trader. Anyway, this is one of the patterns that I covered for my members last month, was how to use ADX breakouts. And it's one of many strategies that I cover. You may have seen me publish on it everywhere, but basically I look for ADX to come from below, break over 40. Once it breaks north of 40, you add 50 cents to the high of day in which it does so and go long once it does so. And that would have triggered over here, right? One of those 2 days. Once it did so, it promptly ran 4 points. Now, I don't know about you, but I love charts like this, where it does a accelerating breakout, and you could have made a whole lot of money without any major pullbacks or up and down price action or frustrating false breakouts. It's a very consistent type of a chart. Those are the type of patterns that you'll be learning with me in Breakout Mastery, are these types of setups and the kind of charts to use them with, which is equally important. You may notice that normally when I do my Trading Week Ahead broadcasts and other training, I use white background charts, but exclusively for Breakout Mastery, I use black background charts because we cover some very advanced signals that really pop out more easily visually on a black background chart. So that's one of the advantages you'll get when you learn. But does everyone see that pattern? I've taught it for many years. I used to have a course. I have it as a downloadable course called adxmastery.com. But anyway, when ADX breaks over 40, that's a signal day. Wilder's average directional index is a volatility indicator. To tell you what the heck is ADX, you can Google it. Google is your friend. Anyway, it's kind of like a heat gauge or the volume control on a stereo. When volatility increases, ADX goes up, either up or down. And what I use is 40 as a threshold value to tell me that you've got something that's about to break to the upside, right? And so this gave us a signal. You have to be patient. It was a couple of weeks before it finally broke out. But once it did, gangbusters, and it ran all the way up to 10. Let me ask a question for all the smart cookies in the house. Where would y'all trail a stop if you had bought, let's say you said, nah, I'll take a pass, and finally you got in at 7.25, and you're happy camper, it's up 3 points. You're in the money. Congratulations. Where would you trail a stop to protect your profits? And that's one thing that I cover a lot is risk management and profit taking, because that's important. And hint, the answer is somewhere close. I'm only going to give you a minute. You can type where you want, but where would you trail a stop? Personally, I'd use 9.5. Just often, eyeball the nearest 50-cent region or so. Somewhere in that region, around 9.50, right near 9.48, somewhere, or 9.45, somewhere right under. But yeah, right there is the perfect place to trail a stop. Not down here, not down here, not so close that the random market noise takes it out, but closer is better. So if you can lock in, a 2.5, 3-point win, that's good. Now, is this guy still worth trading? That's a question. It's in kind of a little downtrending / wedge here now, so I would say no, I'm not going to buy it now. It's already done its thing. My long signal triggered way, way back here at the ADX over 40 when it broke north of 40. That's flashed a buy me signal when it activated here. This is kind of downtrending, so I would wait till it breaks well north of 11 before going in long. Okay. Anyway, let's look at more charts. What makes for some great breakout charts? I don't have too much time here tonight, so get on with it. You got a bearish engulfment type of a pattern there. Not technically a bearish engulfing because it's not at the top of the range, but nonetheless, it's a bearish reversal pattern here. This illustrates another professional breakout strategy, which is, who can tell me? From an exit standpoint, I spend a lot more time now teaching traders how to manage exits in addition to the entry patterns and the types of charts. But this is a do not buy nines. This is a sell the nines approach. You may have seen my article in Stocks and Commodities on that. Anything with a 9 in it, like $29, $39, $49, is a good exit target, as I've trained literally tens of thousands of the world's traders who've seen my training on this topic in Stocks and Commodities and my money show appearances around the world and all over the internet. I've been telling thousands of people, sell the nines, and so it becomes a self-fulfilling prophecy. That's another advantage to being a member of Breakout Mastery, is I like to teach you strategies and techniques for exits as well as entries that are extremely well popularized throughout the financial media and therefore tend to produce potentially really good patterns that you can learn from. So is this guy still worth trading? Sure, but not till 30.5 or so. Now, what's one of my favorite patterns? Always cup breakouts. Classic bullish cup. It's nice when there's a large green candle like this at the right side of a bullish cup. The bullish cup looks like the letter U or a letter V or a triangle or whatever. It's a downtrend, steady uptrend, finally broke through here and continue to run up. Let's put that in context with volume so we can see the volumetric chart. Now, because volume was not exceptional on that breakout day, I would trade lighter share size. I might only do 100 or 200 shares instead of 3, to 500 or 300 or 400, or whatever size you trade, or however many shares that you trade personally. If you don't have volume confirmation, and this did not provide volume confirmation, it's still a go because price is the ace of the deck and volume is the king, for those of your fellow card players. So we still play the ace, and the price action told us to buy, which is a good long signal. But because the volume was not increasing at the time the price took out, we don't have convergence. It's not divergent. We didn't see a decrease in volume. That would have been bad. But it only held its own as it took out new highs above resistance. So that's kind of a warning sign that I want you to start thinking about as a trader. Those type of nuances and those types of edges that you learn with me as a Breakout Mastery coaching member are the types of things that I like to cover in each month's charts. And we go through a lot of different charts and a lot of different patterns, and I give you all the aha moments, the gotchas that you likely didn't see, but now you do, right? Because I cover them for you each month. And I've been doing this for many, many years. So they're the last Wednesday of each month. Coming up tomorrow night is what I call Rising Sun breakouts. That's where we're combining candle patterns for momentum, candlestick breakout patterns with Western momentum triggers, and also things like pivots and engulfing charts and three-line breaks and the rest of it. So kind of the East and the West coming together tomorrow night. Let me give you the link to that in the chat box so you can just remember breakoutmastery.com, and that'll forward you over to the page. I used to run it as a separate website along with 71 other websites, but I said, hey, that's getting too complicated, so let's put most of my sites under the Trade Mastery umbrella. If it works for Amazon and eBay, it works for me too, and it does. We have record new subscribers in my subscription services this year. So anyway, what else do we got going on? What are some patterns to look for? I'm a big fan of patterns. Another pattern that I teach is large honking green candles. When you see large green signal candles like these two guys, that tells you you've got some buyers in the house, and usually you get a nice at least 3 or 4 day uptick in that. Now, I ran into a shooting star that became the left half of a bearish engulfment, which dropped but promptly came back to life. It's alive. Bzzzt, cha-ching. And now we're testing new highs up near 28. But anyway, the point is on this chart, what I like about charts to build consistency is a consistent uptrend, right? Week after week after week. Traders around the world have been asking me for years, Ken, how the heck do I get more consistent? Because I'm hit and miss in my trading. Well, welcome to the club, Sparky. That's the way you start off. As you mature as a trader and you trade millions of dollars worth of stocks, and you know how this thing actually works, it's all about risk management. The chart patterns are very secondary. But having said that, you're looking for directional volatility. Directional volatility, meaning the trend continues week after week, and it's not one of these, cheap ass penny stocks that run up 60 cents and right back down again 60 cents. We're not, young college kids doing video game stock trading. We're professional adults trying to hustle our money out of these charts that have some reasonable consistency in them, so they're intelligent, and you've got a few weeks to make the money, at least a few days to make a round trip, right? So I don't like charts that zoom up and zoom right back down again. Those will just blow up your trading account. Sorry to break the news to you, but you will not become the next penny stock millionaire. You become a penny stock broke ass-inaire. But that's funny. Penny stock broke ass trader. But you don't want to be that trader. What you want to be is a smart trader that knows how to trade charts in the $20, $30, $40 share range like I do, like all these guys, right? These are all 20, 30, 40 share. These are the kind of charts you need to be trading. Anyway, large green honking candles, strong directional uptick. That's the uptrend. Those are the kind of charts we teach. Another pattern that I like that this chart demonstrates overall is just how tight and clean the chart is. I'm a big fan of what I call clean charts, combined with classic patterns like small gaps. We see a couple of small gaps back down here in the lower left on increasing volume. That's a convergent price to volume correlation. We've got increasing, sorry if I sound like a statistics geek. Sometimes I used to be a statistician for the Ford Motor Company. Outstanding company. They treat their people right. But Michigan was cold as hell. 30 degrees. It was minus 30 on my 30th birthday when I was working at Ford ELD in Rotunda Drive there in Dearborn. I'll never forget. Minus 30 with the wind chill on my 30th birthday. I said, this is freaking cold. So I'm in Colorado, which is a little bit warmer. Actually, a lot warmer with our heat wave lately. Anyway, large green candle alert. Bearish upper shadow warning. So we want to wait till this guy nibbles over the whole number. We're 35. Don't jump the gun. I used to be the trader. It's like, I don't want to miss out, so I'll buy if it breaks 34.5 or something. It runs up 20 cents, promptly falls back down to earth. I get stopped out. And then to really piss me off, it runs up to 40 without me. Does that sound familiar? A lot of educators are now copying my example walkthrough of that. I saw one recently, but I originated that too. False breakouts and the expertise with which to avoid them is one of the things that I'm very proud of the students that I've had and the traders I've worked with over the years to learn how all this works. But anyway, I hope that at least getting started, these are the kinds of charts you should consider swing trading because they're clean, they're directionally solid, they're not FANG stocks way up at hundreds of dollars, so you don't need to go to options to be able to benefit from it. They're not cheap-ass, under $10 crappy pop and drop stocks. They're stocks with some reasonable directional strength behind them. The older I get, sometimes I get a little grumpy, so pardon my French. Now this one has a bearish engulfing, so that's not good. We don't want to go long yet, but it's in context of a really good uptrend. Oftentimes, patience is a virtue. Patience, grasshopper. Large green candle here. What happened after this big large green breakout candle? Well, it ran from 28 to 38, so a 10-point frickin' run. Okay, so that's a start. Large green candle, nice strong directional uptick. Bearish engulfing here, but it came right back to life, so it held its own. A large green high volume small gapper candle here, so that's cool. It ran up 5 days, promptly rolled over today and said, help me, I've fallen and I can't get up. So if we add 50 cents to the nearest whole number high and we don't buy nines, we'd have to wait till where to buy this, which is perfectly fine. I set up dozens of trades in my Fidelity, SEP, and my Ameritrade and my Interactive Brokers live trading accounts using buy stop limit orders, but I use what I call pilot trades. And that's another writer downer, something to write down and take note of. You may have seen my interview with Tim Berkwin back when he was with Money Show back in the day, a video on that topic where I like to do itty bitty like 10 or 20 share trades just as placeholders to let me know the price action's been hit without me having to constantly babysit the dang portfolio. So you can use these baby pilot trades, and then you get the email confirmation. Here, your trade confirmation is here. And you say, okay, it hit. So then you pull up the chart, and then you put on kind of the real trade, the trade with some size behind it, 100, 200, 300 shares. Anyway, earliest long on this guy would be way up at 40.5. Right, from your NVCR is an acceleration ramp. Good point. That's another pattern I teach. You get, it's kind of like a hockey stick, a steady uptrend, and then a sharper breakout. I believe that's in this month's issue of Stocks and Commodities magazine, is acceleration ramp breakouts. SONC, what do we like about this chart? Well, everything. I like the small sequence of small gaps here. This is a significant small gap that gapped a point or so on high volume. And look at all the goodness that happened after that. Even if you miss the gap day, which often we will. I mean, to be honest, often I'll miss a gap day because, heck, I might be off trading something else. But I find the chart eventually, hopefully within a few days after the big gap, it comes up on my scanners. And then I say, okay, how do we play with this? How do we make money out of this chart? Again, adding 50 cents above the high of the gap day is usually a good place, which would have gotten us in around 31.50. Now, we do have that pesky bearish engulfing right now, so we don't want to go long yet. But if it breaks north of 38, say 38.5 or so, may be good to go. For now, it may do a mean reversion pullback, because this is a bearish engulfing. And again, for more on candlestick patterns, learn from colleague Steve Nissen. He knows everything about candles. A lot of copycat competitors, just like I do. But like everyone tells me, get over it. So what if they copy you? Just keep on keeping on. Anyway, so this may pull back to the moving average and pivot. 50%, which is about where this is. It may pull back into a mean reversion pivot near 32 in the upcoming weeks ahead. So we don't go long yet. But what I wanted to point out was the initial breakout signal here, the small gap, the large green signal candle on large volume. That's a breakout candle. And then we got the subsequent 10 points of price action. You'll often find that gaps will hover or gap to right near or right under whole number resistance. So you can see here, $41 is whole number resistance in SYNT. And sure enough, that's where it gapped yesterday and held the gap today. What I like about this is, again, a bullish cup. Remember this pattern I taught you. This is one of many types of patterns. You see how much, think how much you've learned in the last 20 minutes. It's freaking more than any other competitor's 5 webinars. That's the truth. I'm a real trader. I can go through these things quickly and teach you exactly the ins and outs of what to look for, how to trade it, how to manage your upfront risk, how to use position sizing, how to scale add to your winners and feed your winners, starve the losers, and make sense out of all this stuff called stock trading. And I'm an expert, and I am an award-winning expert, which is cool. You may have seen my articles win Reader's Choice Awards in Stocks and Commodities magazine and so forth and so on. Anyway, the point is you're looking for a sequence of progressively increasing price action candles that are likely to attract new buyers after you get in. Kind of like the whole idea of buying wholesale and selling retail. If I buy from someone at 41.50, I'm fine if I sell to someone else at, say, 47.48 and make my 6 points on a couple hundred shares. I make my cheese, my $1,000 or whatever, and I'm good to go, right? I'm a trader. It's what I do. Again, SYNT. Who cares what the company is? Who cares why price went up? I don't know what most of the companies are that I trade, and I certainly don't have any read on the news play. It's a news play because good news. Who cares? All that's factored into the price. All you care about as a trader is money. Ask any Wall Street trader, any floor trader in the CBOE. Ask any of my institutional clients and market makers, specialists, house traders, prop traders. All that we care about is the money. I mean, it sounds kind of mercenary, but that's the truth. That's what we care about. So we don't care why it gapped up Thursday, or I'm sorry, why it gapped up yesterday, Monday, or why it held the gap today. We don't care why it's been uptrending. We just care, can we buy from someone here, sell to someone higher, make our nut, make our money, and walk out a winner. That's as far as I think about it. I don't overthink it. Trading doesn't need to be Wall Street analyst and entertaining talking heads on cable TV. It's more about the money. I mean, that's just the truth of the matter. But anyway, that's the main thing is these are the kinds of charts that you'll be learning about once you join me, hint, at Breakout Mastery. And again, I used to only offer it as an annual plan, but by popular demand, I broke down and did it to a monthly subscription plan. So you can join Breakout Mastery and get this level of brilliant technical insights and picks for the low, low price of just $67 a month, which I know I should be charging at least twice that, at least $97 or $127 or $147 a month, because I'm a real money trader and I'm the real deal and I'm a famous guy in the industry. But hey, for you guys, $67 a month. So you can join for a month. That's the call to action. It's $67 a month via PayPal. Join for a month. Once you join, you'll get access to tomorrow night's webinar, plus a recording in case you don't feel like showing up, which I get. That's fine. You can skim through the recording to your heart's desire. Keep it forever. It's a downloadable, high-resolution WMV video, plus last month's video you get as well. Okay, and if you want to stick around, it's only $67 a month. And if not, don't let the doorknob hit you on the way out there, baby. Boom. Or $6.95 annual. So you get to save like a month or something. So that's a good deal. But I would just do the $67 a month and try it for a month or two. And if you like it, then you can extend or upgrade to the annual plan. That's what I would do. So, and another thing that my traders tell me they like is because this is a coaching format, you can bring questions. You can ask me to pull up a chart. You can tell me about a trade that went sideways. Like, hey, Ken, I was trying to trade a breakout on Twitter, but I got stopped out. What the F, right? What happened? And I'll pull up the chart, and together I'll tell you, okay, well, it looked good. Sometimes it'll be a good trade. Maybe you made a good trade setup, and it just wasn't meant to be. But many other times, there may be a kind of a fatal flaw in the chart or a reason why the place where you entered wasn't such a smart idea, which is why you got stopped out, all right? And so then I'll fix that for you. I'll tell you what the strategy is you should do the next time you have to bat with that same exact type of chart. So I'm very conscientious and very methodical and very intelligent. I'm a UCLA graduate. I have dual degrees. I used to be a corporate training consultant for a lot of big companies. I've got the credentials up the yin-yang. That's a good technical term. For those of you curious, my client list is a Fortune 500 who's who, and I've got executive testimonials from vice presidents of companies like McDonnell Douglas, Regency, Sheraton, Ford Motor Company, and the rest of it. So that's at Day Trading University /clients. I've been too lazy to move this page over to my Trade Mastery site. Anyway, but these are the types of companies I did. I worked with over 130 companies that hired me over 10 years. And the point is, I've been trusted by a lot of big companies and executive management teams, and I've got a corporate training and development background. So I use a lot of adult learning theory and interactive coaching that my competitors have no clue of touching. Most of the people in the industry are just scummy people who don't have any background whatsoever. There's a few people that have some financial background at least, so that's something, but most of the trading educators are bullshitters. So learn from me. I'm a real, blue-blooded type of guy, with former clients as well as, proof that I really trade, which I think helps. We'll look at other charts in just a minute. We got just a few minutes left. But again, the fact that I can prove with tax return proof that I've done as much as 4.9 million in trades in a single year puts me in a category by myself, and I should be charging a F load more than I do for my training, and you and I both know it. So join now before I come to my senses and raise my prices back up like I used to. Anyway, and I'm refreshingly honest and candid. The older I get, the less I have time for tomfoolery or BS or, anything. I think cream rises, and I like to be very honest and active in teaching you things that work. So anyway, charts of your choice. Each month you can bring, a chart or two, and you can either email it to me or just ask me to pull it up in my professional trading workstation. We can take a look. We can do what I call trader postmortems, kind of like CSI. What are your trades, wins, and stops? How to improve them? So I put a lot of thought and work into this. It's world-class training. I've been doing these every last Wednesday of the month for the last 7 years of my life. They've been popular with hundreds of the world's traders, mainly stock swing traders in the $20 to $50 a share range. That's the main bailiwick. I mean, if you want, if you're a Forex trader, I can pull up an occasional FX chart. Or if you're a day trader, we can always pull up day trading charts as well. I love those. So that's fine. I'm here for you as a resource. So for example, when it looks to avoiding false breakouts, here's a quick introductory slide. There are things that you may want to use in terms of the point values above previous day's highs before you get in. There's a lot of stuff in here. I'm not going to go through all of it, but so here's what the tail end of this year looks like. And again, this is continuous. It loops. The curriculum loops. For the last 7 years, I've taught volume momentum breakout trading every January. I've taught breakout turnaround trades, a new strategy I developed. Well, 7 years ago I developed it, and with new chart patterns. This is what the tail end of this year looks like in terms of the curriculum that you'll be learning once you wisely, intelligently act now and join me at Breakout Mastery. So we're going to be looking at some Voice of the East, some candle patterns, along with momentum Western breakouts. Tomorrow night is one. Again, if you can't make it tomorrow night, that's okay. The recording will be put in the members area within 24 hours after the webcast, so you can take advantage of that. Those are the topics that you'll be learning. So they're on the website, so I'm not going to sit here and look at it for too long. But you've got a choice, a fork in the road. Join me at Breakout Mastery. And that's kind of it. But that's all, folks. What do we got here? USFT. I don't like the two. Here's another thing. Beware. Because this is a shooting star right here. And another bearish upper shadow. So kind of tweezer top. Beware of charts that kind of like have hair sticking up, or the shadows are up. That's a bearish reversal type of a sequence of patterns. What's interesting is when you see these on the downside after a pivot, it often leads to a breakout. What do you do when you see a bearish sign like a bearish engulfing here? This is a bearish engulfment, right? Yes, it is, but it's in context of a broad technical picture of a huge strong uptrend. So all this is telling us is that we would close out an open long or go short if it loses 25, or we'd wait until it breaks over 30 before we go long, and we don't trade inside this region, right? That type of thought process is what I like to bring to the table in Breakout Mastery. It's a very disciplined, step-by-step, honest, intelligent, based on real money trade experience, coaching approach that, I wish somebody had been able to teach me this. I would have paid a lot more than $67 a month for it, right? It's a lot of good training that you get with me every single month like clockwork. And again, no long-term commitment. You can stay for a month and quit, or you can stay for years and stay around like other people have and make it up to, I'll leave it up to you what you want to do. But anyway, I hope that I've made the case for Breakout Mastery being worthy of your consideration for training and development. I'm brutally honest. I'm very friendly, though. I never attack people for asking questions. So it's a safe learning environment. I don't say, how could you have such a stupid boneheaded question? Things I don't say. I might think it, but I don't say it. I'm very nice. I'm a nice guy. I like to play nice. So, and I like to be a friendly coach who's professional and focused and gives you the honest truth, right? About, to be honest, too, another thing is the vast majority of charts that people have asked me about over the last 7 years when they bring them to Breakout Mastery, I wouldn't have touched with a 10-foot pole because it's a crap chart. I have to be polite in how I say, what were you thinking? Why would you trade that in the first place? It's a horrible chart. So I try and say politely things like, I don't know, a chart like AT&T, always a perennial favorite of a horrible chart to never trade. If somebody asked me about, well, Ken, I tried to buy the bounce at 32.5 and I got stopped out. Why? Well, it's because this is a really horrible chart to trade. I won't say a stupid chart, but AT&T is perennially one of my examples of a horrible chart not to trade. That kind of chart is not the kind of chart to trade. Charts to trade are ones like this one, up, up, and away. Nice, clean, tight, wide range professional charts where the money could be potentially actually made. That's your goal as a trader, is the extraction of money out of these charts, not the haphazard, try and buy a bounce and hope it works type of approach. Oh, thanks. Yeah, trader saying here was good. Yeah, HEAR was a good one. Oh, thanks. Louis said joined. I know it'll help. Yeah, I put a lot of work into this. This is good advanced thought for beyond even what I do in swing scans. This is like my most advanced tip of the sword, advanced breakout training, but still very clearly and easily explained. So yeah, I'm proud of the work I put into it the last 7 years, and so many hundreds of folks have been through the training. I appreciate it. So a question from Arnie, can I compare swing scans with trade mastery? I think you mean breakout mastery. Swing scans is weekly, and I don't go as in-depth. I go over 14 charts in 30 minutes. Here we go over maybe 20 charts in an hour. And the difference is I go over advanced technicals. I go over the main foundation, important technical patterns, at a glance and swing scan. So it's a really good overview of outstanding charts. And it's my most popular alert service for good reason. It's focused and fast. Breakout Mastery, on the other hand, covers not just swing trading, but we also look at day trading charts. We can look at other markets. We look at a variety of different charts. And the main thing about Breakout Mastery is it's very advanced technical patterns. Like I don't have time to go over, or I choose not to make time, I should say, to go over things like ADX over 40 breakouts. Here, you worked on this chart too, right? It broke over 40 here, and if you'd gone long, it eventually ran up to new highs. I go over advanced technical patterns that I don't cover anywhere else. So that's the exclusivity of Breakout Mastery. So it's advanced. I would say swing scans is beginning, intermediate. Breakout Mastery is advanced swing trading, mostly. Oh, sure thing. You're welcome. Let's see, is ADX overvalued in LFVN? No, not at all. As long as it keeps going up, that means the volatility is hot. What you're concerned about is if it starts to drop back down under 40. But as long as it holds above 40, that means, see how it held above 40 all the way from here during the heat, during the hot run? That's kind of the heat gauge, ADX over 40. Whenever it does one of these guys, and it's rare, that's why I take a lot of time scanning for everybody. It's one of the benefits you get as a Breakout Mastery member is I like to scan through dozens and dozens of charts and pick out 20, 30 that make sense and give you very good advanced patterns. But anyway, the point is, as long as it's up in the sky here, we're good to go. What we don't like is if it starts to droop and drop and chop and get back down under 40. At that point, it doesn't mean that the price action will necessarily reverse, but it does mean that it'll likely do what? Go sideways. So when ADX goes up sharply, price is either going up or down sharply. When ADX goes sideways or declines, price is going sideways. It's not necessarily a decline in price because it's a volatility indicator, not a directional indicator. So when it's going up, you'll also see, for example, ADX goes up when price drops largely. Just a quick side note. Like Harmony, see HMNY? This is one of those horrible penny stocks that speculators trade. ADX broke out sharply to the upside when the price collapsed in half, or in by 80%. This goes up. So it's a non-directional volatility indicator. If we look at that Skechers chart, right, SKX, you'll often see ADX goes up whenever there's a gap. And you can see it didn't break over 40, but it did start to spike up here right after the gap. So, those kind of nuances are good, advanced insights that I spend my life trying to figure out for you guys. It's like being a puzzle master, and you're trying to figure out the answer keys to a very complex, like a Tomb Raider, Indiana Jones dungeon without getting skewered by the arrows or rolled over by a boulder or whatnot. So I like to try and, try and keep you guys on the safe side of this stuff, because the force is with us. And I certainly hope that you'll find Breakout Mastery a force for good for your trades. So I like to answer questions. I do stick around, I'll stick around, up to half an hour answering questions or whatever it takes. So if you do have questions from my members during the members events, go ahead and bring them to the events. But again, you don't have to sign up for an expensive annual. You can just start off at $67 a month and see if it's right for you. It has been for hundreds of others, so hopefully it'll be right for you too. And again, it's very step-by-step, very experiential, very interactive, answering questions, and a friendly, safe learning environment. Well, hey, Kathy, you've been with me forever. I recognize your name. Good to see you again. Saying, what do I use for scanning for good charts? I just use a standard leaderboard scan. It's the old school hard way. But I do all this tedious scanning for you guys in the percent gain list, so you don't have to. So I go through these things constantly, daily, and I try and find at least 3 or 4 good ones each day. And I do that for both intraday and swing trading. So I'm old school. I just use the percent gain list in the New York Stock Exchange and also in the NASDAQ. I don't use the point gainers because those give you really expensive stocks usually. See, 500 a share, 300 a share, 2,000 a share. I don't think so. Thanks anyway. Give me percent gainers where I've got a lot of charts in the 20, 19, 20, 15, $50 share range, charts that I like to make sense with. So yeah, that's how I scan, is tediously, the long way. So you guys don't have to, right? Question from Deepak, what are the moving averages I use? Good question. One that I always get, the 50. I know it's hard to see. The 50, the 100, and the 200 simple moving averages. So the 100, the 50, and the 200 SMAs. Thanks, David. I appreciate it. I think that about does it. Hey, thanks, folks, for being here. I appreciate it. And see, I wanted to give you good, honest training, which I did. I hope I had a few light bulbs and aha moments go on with some good advanced tips and strategies of things to look at, like the large whole row body green candles, bullish cups, acceleration ramps. And mostly, the main thing I want you to get out of all this is what freaking kind of charts should you be trading to potentially make a boatload of cash. They're not pop and drop cheap ass stocks, pardon my French. They're not FANG stocks that are expensive where you got to resort to options and lose all your money doing that. Instead, they're consistently uptrending strong charts with a good false breakout filter added to the top to stay clear of trouble, and trading charts that are as clean and wide range and sensible that that you can potentially do extremely well with. So like this chart, right? That's a beautiful chart. It's a beautiful thing. You could have bought here, bought again here, maybe sold and panicked out, then bought again here, and you're all good, right? And those are the kind of charts you want to trade. So Anyway, join me for Breakout Mastery. Y'all have been great. Thank you for your kind words. I appreciate it. I'm going to go spend time exercising now. I'm on this big exercise thing. I'm doing a lot of martial arts weapon type exercise and also something called the body bar, which completely unrelated to tonight's presentation. But at age 54, I find I got to spend an hour a day on exercise or else things go sideways. So try and stay sharp and focused. I just went to the gym today and did half a mile fast walk, jogging, and free weights, and the cable machines on the rows, and the leg presses, and all that kind of stuff. Good to get in shape, and I want you to get your trading in shape too. Like going to a gym. See, I circled back around. There is a point I'm trying to make. Like going to the gym. Successful trading is a lot like Tony Robbins would say, repetition leads to mastery. And that's true. You may have heard that phrase about 10,000 hours or 10 years it takes to mastery. That's very true. Hopefully it won't take you 10 years, but instead just a few months once you join me as a member exclusively at breakoutmastery.com. So I'm Ken Calhoun. I hope this has been good, honest, somewhat entertaining, and useful training to help you guys get up to speed on advanced stock trading breakout webinars and videos. Go ahead and join now. Operators are not standing by, but the internet is, so you can join with PayPal or whatnot, and I'll see you guys on the other side. Again, our next event, the reason I scheduled it for tonight, this one is, it's tomorrow night. So, oh yeah, that's another call to action for all of you watching this either now or later on the recording. Do please get your orders in no later than, say, noon or so, maybe 2 o'clock at the latest, East Coast time tomorrow. Do not join, 20 minutes before the webinar and say, hey, can you give me my login and password and all that. Join either tonight or sometime tomorrow. If you want to get into tomorrow night's webinar to join me live, do try and get your orders in. Sleep on it if you want, but get the orders in tomorrow morning before lunchtime, and that way I'll have time to accommodate you and take care of all you guys. So many new members, it's going to take me some time to get it taken care of. So y'all have been great. Thank you for being here. Hey, Mukesh, people just get better with time. So, hey, thanks, Louise. Appreciate it. And I think that'll do it. Oh, thanks, Kathy. Saying it was great. Thanks. Well, you guys are great, so thanks for being here. I know time is our most valuable asset, and I hope I've made good use of yours, mainly by giving you some good, thoughtful charts to think about. Again, although not a trading recommendation, you might want to look at these charts if they take out new highs, I'm just saying, over the next week or two. They're all good charts. And join me for Breakout Mastery. Take care and best wishes for success in your trades. And yes, it is being recorded. I will upload it to my Amazon S3 server and put a link in the GoToWebinar mail that you'll be getting later tonight. So you will get a download of tonight's entire webinar that you can download and keep and treasure forever. So at least skim through it a couple of times. So you guys take care. You've been great. Peace. I'm out.